It's been a decent day so far. 11,700 or thereabouts is where the Nifty was flat for the first half of trade. In fact, so far it has recovered after 11 or something thereabouts. We saw that bit of a move come by on the Nifty, and that was primarily on account of the fact that the IT stocks, they've done fairly well. So as we speak, we have TCS, which is at the high point of the day. We have other index gainers as well. We have the likes of Tata Motors, which has been gaining for the second day in a row this week so far. It's added close to 15% to its market cap. Bharti Airtel also is moving higher. Bharti Airtel is at the high point of the day. Eicher Motors now has petered out most of those gains that we've seen in the morning. There was a dichotomy this morning. Last evening, we got two pieces of news on Eicher Motors. The first one, that the Royal Enfield sales have been lower by 20% year on year in the month that went by. And the second news was Vinod Dasri, ex-Ashok Leyland, joining Eicher Motors. The stock opened with a gain of close to around 3.5–4%, moved on to about 5% gains, and currently sitting with a gain of about 2.5%. Another couple of stocks that are on our radar, the metal stocks, they're seeing a bit of sell-off as we speak. We have Hindalco, which is currently at the lower end of today's trading range. We have JSW Steel as well, and Tata Steel not doing too well. Asian Paints has been doing fairly well. This morning there was a report coming in from ICICI Securities telling you that maybe paint companies will grow in double-digit volumes in the fourth quarter as well. So what is doing well are the frontline indices. The Nifty Bank under a bit of pressure, and we have the mid-cap index, which is underperforming. First up, we go on to the top stories, and then we get in cracking to individual stories. Frontline indices off the morning lows, pulled by IT heavyweights Infosys and TCS. HDFC is the big drag. Mid-cap index underperforms. The Congress releases its manifesto focused on wealth and welfare. Party President Rahul Gandhi calls Nyay the big theme. Focus also on jobs, education and budget for farmers, and changes to the GST. The Supreme Court strikes down the Feb 12th circular as unconstitutional. Move delivers a big blow to RBI's initiative towards speedier recognition of NPAs and a better credit culture. Relief for borrowers and banks on provisioning. As the street awaits the full judgment from the apex court, fears arise that the Jet Airways' new resolution plan may come under a cloud, being the only large account currently being processed under the Feb 12 circular framework. Eicher Motors rises as street shrugs off weak Royal Enfield sales for March. Ashok Leyland's Vinod Dasri joins Royal Enfield as CEO for 5 years. Bajaj Auto reports strong sales. Management expects growth momentum to sustain. Godrej Properties surges after reporting its best ever quarterly sales performance, selling over 2,900 homes, booking value of over 2,100 crore rupees. Cyient, on the other hand, takes a big knock following a profit warning for the fourth quarter. All right, with that, we go on to the exclusive that is flashing for you on your screen. The much-awaited mega strategic stake sale announced by Zee Entertainment has hit a roadblock. Sources tell CNBC-TV18 that talks with Sony have actually hit a rough patch. Nisha Poddar gets us all the exclusive details. Nisha, not working out between Zee and Sony?
That's what we are gathering from sources with direct knowledge after speaking to several participants who are familiar with the situation at Zee Entertainment. We do gather from sources that at the moment, Zee as well as Sony are not seeing eye to eye on some of the terms of the agreement, and therefore this particular transaction has hit a roadblock. Remember, they were working in a very tight schedule, and earlier the promoters of Zee Entertainment Essel Group had announced that they would be looking at a stake sale, and the deadline ends in March-April 2019. So that looks extremely difficult at this point, but I would say that Essel Group is also in the market, has reached out to several other participants which are domestic as well as foreign in nature, and who have been deliberating on this transaction now. So looks like that Sony talks have really failed at this point. There is every possibility that Sony may get back if there is desperation on either of the sides. So that's what happens in deal dynamics. But at the moment, Sony being at advanced stage of buying out Zee Entertainment, a large chunk of that looks unlikely at this point, and there are several other participants who are looking at this particular transaction. In fact, I would also like to say that there are several structures being worked out where Essel Group promoters may like to retain a part of the business that they would like to grow independently. On the other hand, they may like to sell piecemeal of some of their businesses to different parties. So there are various combinations and permutations being worked out at this point. But the big takeaway right now is that Sony had reached an advanced stage of discussion of buying out a large chunk in Zee Entertainment, and that looks unlikely at this point.
All right, Nisha, thanks very much for that. In fact, this is a story that's also important for mutual funds, given the large exposure that mutual funds have to Zee Entertainment. But let's get started with Mutual Fund Corner. Pankaj Matwal of Optima Money Managers joins in to answer all our many queries. Pankaj, hi, good afternoon. Yeah, before we get to queries, I actually chanced upon some good data on how the flows into mutual funds shaped up in Feb. So, the bulk of the money that came through in Feb actually flowed through to the small cap funds. So about 1,000 crores plus. And this was a category which had already seen about 800-900 crores of inflows in Jan. ELSS, of course, no surprise over there, given that it's tax saving season. Multi-caps, another big, attractive basket for investors in February. Mid-caps as well. And on and on and on. The list goes on about, the kind of money that flowed into various categories of equity mutual funds. It's the balanced funds, the aggressive hybrids, etc., which saw big outflows. I mean, almost 1,500 crore rupees, and that's a trend that's likely to continue. But Pankaj, given the recent market rally that we have seen, we're expecting that for March, this whole equity plus ELSS category could deliver close to about 7,000 odd crores, which is an improvement, right, over the last few months. But do you expect this trend of people investing in small caps, mid caps, multi caps to continue, and that balance would just sort of be on the sidelines and keep seeing redemptions?
Yeah, see, if you say last 1 year, the small cap have still missed down compared to their the highest peak NAV. So that's the reason that investors are expecting that they would get more returns in small cap or mid cap if they invest now compared to large cap or balanced funds. So that's the reason that more and more investors are investing in small cap. And another reason that before that, if we see the last 3-year return, then small cap, mid cap have outperformed the large cap. So investors are expecting that there was a time when small caps were delivering very good returns, and because NAV is down right now, so this is the time to enter in small cap and mid cap for better returns in future.
All right, so it looks like it's the small cap, mid cap party that's likely to continue. All right, with that, let's answer some queries that have come in. Mr. Hari Shankar is on the line with us from Tamil Nadu. Hi, Mr. Shankar. Good afternoon, sir. How can we help you?
Good afternoon. Thank you for having me on the show.
Go ahead, sir.
Yeah. I have invested in Access Long-Term Equity Fund, Birla Sun Life Tax Saver 96, and Tata India Tax Saver.
So what is your objective,
my query is, it's two parts. Should I continue in the above three schemes, or should I shift to other ELSS funds that are giving better returns? And another query is there any ELSS fund that mimics the Nifty or Sensex?
Okay. So I have two queries for you as well. One, of course, is that what is the objective with which you're making these investments? How long have you been investing? How much money have you invested? And how much, what's the corpus that you're looking to collect, and at the end of what period?
No, my concept is to save on tax, not for the corpus.
Okay, so tax saving being your only concern, right?
Yes, that is right.
Okay, Pankaj, in that, given that context, how does the portfolio look to you, and which ELSS scheme would most closely mimic the index?
So, Mera, first thing, as you said, that he is investing only with the with tax saving idea. I'll say that any investor, because tax saving is one region, and that is available with many schemes in the equity, debt, even a children school fees also you pay, you get tax saving benefit on that. But you should always link your investment to some goal, so that you can always track that whether you are investing for the right region or no, and how it is performing. So tax saving should be second criteria. First thing should be your financial goal. Now coming back to this portfolio, all the three schemes which you have selected are very good, and some of the best schemes in this category. So continue with these schemes, and as you want to start investing more, or you want to add, I'll suggest that instead of adding more schemes, add money in the existing schemes only, like Aditya Birla Tax Relief 96 is a very good scheme, very old scheme in this category. So add some funds in that. Even Tata Tax Saver or Axis Long-Term Equity are very good funds. So invest in these schemes only. Do not need to add more schemes in your portfolio.
Okay, Mr. Shankar, does that work for you, sir?
Just one more thing. I just want to give a reply that education expenses is an expense. But whereas this is an investment, that I will lose my money. Whereas in this, I'll get back my money. That was my limited point.
Well, don't be so sure of that. It's all a factor of market returns. But I hope that you don't lose any money. All the very best. All right, let's take a very quick break. We'll come back with lots more mutual fund queries to answer in just a bit. Stay tuned. Hi, welcome back. You're watching MF Corner. Pankaj Matpal of Optima Money Managers is our guest this afternoon. And our next query comes in from Raj Yadav, who's on the line with us from West Bengal. Hi, Raj. Good afternoon.
Yeah, good afternoon.
Go ahead. What's your question?
The two queries I already have said. So, the first query is to collect a corpus of around 5 to 7 lakhs.
Okay.
In less than 5 or 4 years.
Okay.
The second query is around for the long-term goal that I want to collect the corpus of around 2 crores in 20 years, and less than 1 crore in 10 years. And the third query, I want to ask that I'm planning to invest in contra funds of around 500 rupees per month. So can I start that?
Okay.
And
Raj, let's first address your first query, which is on your investment and the kind of returns that you're expecting. You're investing in 3 funds currently, like ICICI Prudential Large Cap, HDFC Small Cap, and the Mirae Asset Multi Cap, right? A total of 4,000 rupees a month.
Yes.
Okay, so first let's address your query on how you can meet your goals. So Pankaj, currently he is investing in just 3 funds. The investable amount is also, on the lower side, but then he is only 21. The one thing that is worrying is his short-term goal, because it's just over the next 3 to 4 years where he hopes to collect between 5 to 7 lakhs. Is that possible, and how do the longer term goals stack up?
See, first thing for short term, 3 to 5 years, what you expect to accumulate some 4-5 lakh rupees. It seems difficult because if you assume some 12-13% return from mutual fund, first thing I'll tell you that if you invest in equity fund, your time horizon should be really longer, not that 3 to 5 years. And second thing, if you expect even that 12-13% return from your schemes, it's not possible to accumulate 5 lakh rupees in 3 to 4 years. You can accumulate something 2,50,000 rupees if I calculate at 12%. So that is one thing. Second thing, that 60 lakh rupees and 2 crore rupees what he wants to accumulate. For that also, though he has sufficient time, but he will have to increase his investment amount. Now also, at the same time, year after year, he'll have to increase the SIP amount to accumulate that. So both are things. For short term, my suggestion that if it is not very urgent, I don't know what is the goal, why you want to accumulate that money. Otherwise, postpone that goal for some more time so that you are comfortable to accumulate that amount.
Okay. Raj, that's the answer to your first set of queries, right? Which is that the short-term goal looks to be on the difficult side. And in any case, 3 years is too short a time frame to be investing in equities. For your longer-term time frames as well, like Pankaj said, you need to increase the amount you're investing. His next query is on contra funds. He's looking to invest 500 rupees a month over there. Given that, contra funds anyway is a very small portion of the market, right? But now, given that the market looks to be on an upswing, is that the best space to be looking at, or should one just look at a multi-cap, mid-cap?
See, he wants to invest for long term. So if he wants this category also to be included in his portfolio, he can definitely go for this. And the scheme also, what he has said, Investco Contra Fund, that is performing well. So he can add that. But more than this, mid-cap is missing in the portfolio. He has small cap, he has multi-cap, he has the large cap, but mid-cap is missing. So before going for contra fund, my suggestion that he should add mid-cap fund in his portfolio.
Okay, so Raj, that's 2 of your queries answered. What's your last one?
The last query, to ask that Mirae Asset has been moved to large cap category. So What is the options available for multi-cap funds, other options compared to ISL?
Okay, what would you recommend?
ICICI Prudential Multi-Cap Fund or Aditya Birla Sun Life Equity Fund. These are two good multi-cap funds.
Okay, Raj, all the very best. I hope that answers all your questions.
Yes.
Okay, thanks very much for calling. Up next, we have Kanishk Bhalla, who's on the line with us from New Delhi. Hi, Kanishk. Good afternoon. What's your question?
Yeah, thanks for taking my question. My question is, I have a mutual fund investments under regular scheme which have been purchased from a banking app. Now I want to switch these from a regular plan to direct plan without redeeming my current investments. How should I go about doing this? I want to use a platform where all my funds are shown at a common place. And my second question is that I bought a ULIP of 1,50,000 for which I have to pay a premium over a period of 5 years. Now, I don't intend to continue with the ULIP. So, after a period of 5 years, should I be redeeming my investment or should I keep it invested?
Okay, so Kanishka, let me get this straight. The regular plans that you've taken of mutual funds is from what app you said?
Yes, it is from a banking app.
From a banking app, okay. Yes. Pankaj, what does he or anybody else in his situation do currently? Just stop the SIPs there and continue the future SIPs from a direct route?
No, he doesn't need to stop it here. There's a very simple procedure. Though there are many ways of switching from the regular plan to direct plan, but the easiest way is one mutual fund utility platform. All the asset management companies, all the fund houses, they have set up a separate platform, which is known as MFU. So on that MFU, once he registers and he opens a common account number, once he takes that, there's a facility to switch from the regular plan to direct plan. So he can do that, and the fresh SIPs will continue from the in the direct plans.
Okay, and the second being this ULIP policy that he has taken, where he pays the premium over a 5-year term. What does he do at the end of 5 years? He's not comfortable with the idea of ULIP. And before you answer that question, Kanishk, I hope you would have realized this a little earlier, but nevertheless, don't mix insurance and investments in the future. But Pankaj, what does he do now?
Yeah, if it does not meet the objective of investment, it's a good idea to surrender the policy, and whatever the proceeds comes, he can reinvest that in some good mutual funds or anywhere else you feel that will help you creating wealth for your financial goals. So mutual fund is a good idea because you're investing in ULIP, so the same money in the same kind of instrument, but less expensive.
Okay, Kanish, does that answer all your questions?
Yeah. Thank you so much.
Okay, so remember MFU, right? That's the site that Pankaj has recommended. Okay. Up next, Girish Bhatia has written to us on Twitter. So his query is that his daughter is currently 5 months old and he wants to start a SIP portfolio for a period of 18 years. He already has a portfolio where he's investing close to 50,000 rupees a month for his early retirement. Now, we don't know the schemes that he has chosen. We don't know how much money he wants to invest further for his daughter. I'm assuming on his behalf, I'm going to assume that he will need at least 20 to 30 lakhs at the end.
How much he's investing? So
he's investing 50,000 a month.
Yeah, but which schemes are in the portfolio? We don't know how much corpus he wants to accumulate. So considering that he wants to invest the fresh amount for child education, I'll say he can start with 10,000-15,000 rupees per month. And because time horizon is quite good, I'll suggest that you have maximum exposure in equity schemes, and one hybrid scheme you can have in a portfolio like Balance Advantage Fund. So here one mid-cap fund, one small-cap fund, and one hybrid fund. And hybrid also we have the advantage of this Balance Advantage Fund where equity and debt allocation can be decided by the fund manager time to time. So you go with this portfolio. Do not have so many schemes, but if you are investing 15,000-20,000 or something, 4 schemes are good enough.
Okay, and one final query from Sanjay Bedya. He sent us an email. He wants to invest 30,000 rupees every month for 2 years and only for 2 years, but he'll keep the money invested for 20 years. So how could he construct his portfolio?
That is also like a long-term horizon only because you're investing only for next 2 years, but that amount what you invest will stay for a long time. So again, I will say that you should have more exposure in equity, but in your portfolio, all types of schemes should be there, means large cap, mid cap, small cap, multi cap. So go for this, like ICICI Prudential Blue Chip Fund or Aditya Birla Sun Life Frontline Equity. Then in mid cap, you can go for ICICI Prudential Mid Cap or Kotak Emerging Equity, SBI Small Cap. These are some good funds you should have in your portfolio.
All right, Sanjay, hope you were listening in on that one. Pankaj, thanks very much for joining in and for helping our viewers construct better portfolios. We'll wrap up on this show. Remember to keep sending us your queries. You can email it to us and we'll address them with our experts. The email address has been flashing for you. You can also write to us on Twitter or Facebook. Do stay tuned. Closing bell will take you through the last hour of trade.